Hey, buddy, my name is John Fisher. Welcome to salesleads.tv. There's a lot of confusion actually as to what a qualified accredited investor is. Um, this video is done for my website, and the purpose, the actual goal, is to increase our rankings. Search engine optimization, and also to inform my potential clients and future clients as to what's going on in this particular arena, which is the investment arena, private placement, accredited investors, and so on. So the accredited investor is defined as a person that makes $200,000 a year for the last 2 years, or $300,000 combined, million net worth, not including their home, and experience in managing their personal portfolio. And it seems like they're expanding that a little bit more. But someone that's experienced, someone that knows what the hell they're doing. Hedge funds don't allow a just an accredited investor, and neither does a master private placement. So your normal private placements are, let's just say, a Reg D 506C, which is 5 million plus the little C instead of the B. The B is the old ones that had required to have a pre-existing relationship, 30-day cooling off period. A couple of years ago, they came out with the Reg D 506C, which allowed solicitation. But there was no 50 exemption. The other ones, the little one, the 504B, allowed 50 people not to be accredited. That was a headache, opened you up to all kinds of scrutiny and the audits and stuff like that. So really the choice of vehicles to raise money, let's say I wanted to take my company, salesleads.tv, and do a private placement. I could do it legally. It's no problem at all. And that's why they put that together to go ahead and increase the amount of private investment, and to give you incentives to be able to expand your business without going into the stock market and stuff like that. So the hedge funds, or a master private placement, which is like over $5 million, 10, 15, 20 million, and so on, they have a different requirement. And that requirement is that they have at least $250,000 liquid risk capital, and they have that 5 million in investable assets. Now, what I've done is, instead of just like, I've been in the business 32 years, I must be pretty smart. You hear about this artificial intelligence out there. And so what I've done is, we're going to go ahead and review the artificial intelligence questions and answers here, and their definition. And if I agree, I'll tell you. And if I disagree, I'll tell you, because I think, as far as this particular arena, I think I'm a good match as far as having the right intelligence, hands-on, doing this for as long as I have. I'm not saying I have all the answers. I'm not saying I don't make mistakes. But let's get on with it. Here, qualified accredited investor is an individual or entity that meets certain criteria established by securities regulations in order to participate in certain types of private security offerings. Generic. These offerings typically involve higher levels of risk, are not subject to the same regulatory requirements as publicly traded securities. The criteria for being a qualified accredited investor vary depending upon the regulatory body and type of securities offering. However, in general, qualified accredited investors are individuals, entities that have a high net worth, substantial investment experience, and professional designation. Sounds to me like a bunch of gibberish. I think they said the same thing 3 or 4 times over and over again. In the United States, the Securities Exchange Commission has established criteria for determining whether an individual or entity qualifies as an accredited investor. According to the SEC regulation, any individual may be considered an accredited investor if they have a net worth of at least $1 million, excluding the value of their primary residence, annual income of $200,000 or $300,000 combined. So far, we agree. For the past 2 years, and a reasonable expectation of the same income level in the current year. Okay, I'll take it. Entities such as corporations, partnerships, and trusts may also qualify as accredited investors if they have at least $5 million in assets, or if all of the entity's equity owners are themselves accredited investors. So I guess a corporation could be an accredited investor. Okay. The criteria for being qualified accredited investor may also vary depending on the type of security offering. For example, certain types of private securities offerings may require investors to have specific professional designations or expertise in a particular industry. Being a qualified investor offers several advantages. So still, we're getting a lot of, it's vague. This is very, very vague what we're getting here. Being a qualified accredited investor offers several advantages, we know that, including access to certain type of private security offerings that are not available to the general public. These offerings may include private equity investments, hedge funds, and other alternative investments that are not subject to the same regulatory requirements as publicly traded securities. However, being qualified also comes with certain risks. So, we understand the risks, any kind of, investment. Now they're going on to talk about qualified investors may also be subject to increased scrutiny and potential liability in the event of investment losses and other legal issues. Investors should carefully consider the risk tolerance. This is a big, risk disclosure here. It's important to note being an accredited investor does not guarantee investment success. I mean, of course not. Yeah, and it says investors should still conduct through thorough due diligence before investing in any opportunity. Investors should also be aware of risk. So this is that gibberish. So in conclusion, what we can come up with, past this CYA, this computer is doing a little bit of CYA action. It's real simple, and I like to keep it simple, stupid. The accredited investor, 200 or 300 million net worth, not including their home, experience in managing their personal portfolio, and let's hope they maintain the same income level for the coming years. But I'm telling you that a hedge fund will not accept an accredited investor. He's got to be qualified. A regular accredited investor does not have for a qualification 5 million in investable assets. Only the qualified accredited investor does. Now, if I'm wrong, maybe someone will correct me, but that's the main difference. And when people call me up and they say, hey, we're doing a hedge fund, which we hardly ever do, hedge funds usually don't need leads. They got a nice book. They have plenty of people. But let's just say they did call up, or there's some guys that, they think they're going to start a hedge fund. They can't buy accredited investors. They have to buy qualified accredited investors. So I know it's a little bit confusing, but you know what? It's almost like the government sees the increase in risk, and the government's looking to protect the people, and therefore wants the people to have a higher net worth and a higher degree of being, sophistication, and of course having the ability to handle the risk. That makes sense to me. I understand that. If you have any questions at all, and by the way, we do have qualified accredited investors. They started out as business leads, 5 million plus in annual income. The people were actually surveyed by a huge oil and gas company in Dallas, Texas, and they were qualified for $250,000 minimum per unit, and they were also vetted not only to be accredited, but they had to have at least 5 million in investable assets. We call them big dogs, and they have their own website, bigdogs.tv. Unfortunately, since the downturn with the oil and gas market, they reduced their manpower to almost nothing. We've lost so many of our oil and gas customers right now because of the insanity that's going on with this administration, choking our own country. A country that was totally independent of oil. Now we're begging Russia and Saudi Arabia to buy oil. We spend the entire, don't get me started, we spend the entire, or almost all of our emergency oil supply, and then now they're going to go ahead and replace it at some extraordinary price. I wonder who's making the profit margin on that one. That's our strategic oil supply. That's when you go to war and they cut off all the oil, at least you have in the ground enough oil to sustain the country while we're going through that whole time. It's just amazing that we're doing this. And I'll tell you what, it's hurt my business dramatically. I've lost a lot of my oil and gas people. But I'm sorry I got off of that tangent. Yes, I am a patriot. You have a problem with that, don't call. Sorry. Most of my customers are patriots, and that's just the way it is. Have yourself a beautiful day. If you have any questions, 561-239-0364. God bless. Bye-bye.